Today we're talking about Bitcoin. Bitcoin was over $100,000 a day or two ago and got down into the low 90s today. What happened? What's going on? This is just nuts. I remember trading Bitcoin when it was couple $100 per Bitcoin. Now we have $5,000 to $10,000 daily ranges in this thing. I love it. I love it. If you're interested in this sort of stuff, please like this video, subscribe to the channel. And if you want to get newsletters about this sort of stuff, in addition to other global macro subjects like what I talked about yesterday, go to macro-ops.com, sign up for free. We send out a number of emails per week. Let's get into it. I created this is a 3-day chart of Bitcoin. And what I did here was I grabbed 4 of the biggest, most important volume-based Bitcoin products, as far as not the ETF, as far as either Bitcoin on Coinbase, the perpetual futures on Binance and Bybit, and the Bitcoin futures contract for the CME, Chicago Mercantile Exchange. So this is all 4 of those, as you can see, and then I just divided by 4. So why did I do that? It's to get a unified picture of the price and volume of the futures contracts. Now, understand, and the Bitcoin spot Coinbase, because that's where a lot of Bitcoin is bought, especially by the ETFs. Now, about that, the futures, so the perps and on Binance and Bybit and the CME, they have a bit of a price premium. So when spot, like on Coinbase and just regular BTC USD, that is the spot price of Bitcoin, okay? The futures and the perps, these actually have a bit of a premium because they're called futures. They're the future price. There's a bit of a premium because the contract expires and they have to adjust. So that's a little kind of nuancy of it. But let's take a look at what we got here. So this histogram on the right-hand side of the chart that kind of expands to the left and out, and there's dotted lines and everything like that, that's called volume profile. Volume profile measures the amount of volume of an asset traded at a key level. So oftentimes you see volume at the bottom of the screen, and that mostly indicates the volume on a day, but it doesn't show the price that the volume happened. Okay, so this is the volume profile is irrelevant on how much volume happens per day. It's relevant on what happens at each level. Okay, so this is a 12-month chart. So the volume goes back from January or whatever. So January 1st, 2024 to December 31st, 2024. And then we start the new one over here, which is very small, so you can't hardly see it. If I was to turn it off, in fact, I'll show you real quick. You can kind of see that it's starting to develop here. But 2024 was a big volume year, and that's what we're going to focus on here. Okay, so I've combined the volume of all 4 of those products to get a good understanding of where we have high volume areas and low volume areas. The high volume area is represented by this dotted line on the top, this white line on top and bottom. This is our value area. Okay, 70% of the volume of 2024 was traded within this range of, it's about 75,000, and we'll call it 53,000. Okay, so if I was to look at the chart of 2024, which from here to here, you can see that, yeah, you know what, like 3/4 or 7/8 of the chart did trade within that range. So yes, the first month or so was below it, and the last 2 months, month and a half, 2 months was above it. So we're looking at, that's about 9 months that it traded inside that range. And the absolute highest volume level, which is called the point of control, the most amount of volume was traded at $68,000 level. Okay. That was kind of where the high happened in March, and it kept coming up there. And that's exactly where it blew off from. The day of the US presidential election was at $68,000 level. So a very key level to note for 2024 is that the top of it here and the bottom. So that's big volume. So if we start to get declines, these are where price would find like major declines. This is where support would start to show up because there's enough buyers that have shown interest down in here. Also, it sometimes is areas that kind of collapses from it. So it's important to know the context of the trade is important to note, but understand that that level is there's a lot of volume there. Now, what we also see is this very low volume area right here. Okay. That means that very little, if you wanted to buy Bitcoin at 70, let's call it 78,500, you had to be quick because by the time that you got you got there, it was 79,000, 80, 85, up to 100,000. So when it moved, when you get these big jumps, the price jumps happen really quickly. And a lot of people are like, oh, I'm going to buy Bitcoin tomorrow. And then they walk in tomorrow and it's up, another 10%. And you're like, oh, no. So there's people there are orders is a better way to say it. There are orders sitting here waiting to buy the Bitcoin. Okay. Additionally, if these jumps happen, that means buyers bought in these levels. And so stops are going to be around this area. So if you're to look on an order book, you're going to find a lot of orders, both, stop orders and then limit orders around this area. And that doesn't mean that it has to trade to that level. But when you start to see price movement, it starts to jump. If things decline, it starts to jump down towards those levels because there's a lot of orders there. Stops get ran, buys get hit, and so you get a lot of volatility. So and we have not since, let's call it mid-November, we have not really traded down into that level. So, this is still, we're almost at 2 months that these levels have held, which is important. If we can continue to hold price up higher and not go down into there, then we continue to get this consolidation. And much like what happened here, you can see that we had this big jump up and then the consolidation happens. And we did actually drop down into some of those weak areas, eventually filled it during 2024, during, let's call it March through October. That doesn't mean that that's what's going to happen. Okay. That could happen. We could have another 6 months of sideways action. I'm going to show you why I don't believe that that's the case, but we have to be open to it. Okay. The next thing I have on this, well, actually, let me kind of follow that point through. I have orders in, limit orders where, buy to open if price drops down to 85,000, 82,000, 79,000, 77,000, all the way down to, of course, 69,420 or whatever the level is down in here. I have a bunch of orders in here. And do I think that they're going to get filled? Maybe. I don't know. If I go to bed and I wake up and we have a flash crash overnight and some spikes down happen and I get filled, I'll take it. I will happily own Bitcoin from 67,000 to 85,000, where it's currently at 94,000. I did the same thing over here on Bitcoin. I've done this a couple of times discretionarily. This is not a systematic trade. I am a very systematic trader, but this is discretionary trading. I would love to own Bitcoin at these levels, and I would be happy to own them if we get those drops. The Bitcoin bull market signal is still on, and my analog is still on. So I do believe that we're going to continue for the next 6 to 12 months in a bull market, and so owning it at those levels sounds lovely to me. Now, I also own Bitcoin from lower levels. So if it doesn't drop into those levels, honestly, it's no big deal. Like I would be very happy if we just took off from here. The next thing that's interesting is this obvious head and shoulders pattern. Okay. we have had, I don't know how many people come out talking about the head and shoulders pattern in Bitcoin and how it's, the market top, it happened. That's it. We're done for the rest of the year. This is the end of all trading in Bitcoin, and it's done. That's the bull market. It's over. And they're pointing to the head and shoulders pattern. I'm not an expert on the head and shoulders. That's for Peter Brandt. That's for my boy Brandon here at MacroOps. That's for a lot of other classical chartists. I just know that everybody's talking about it. For me, when everybody's focused on one thing, and I believe, an edge on the other thing, I love to see a head and shoulder topping pattern. I love to see a double top. I love to see a lower high and a lower low. I love to see all these things that look like actual bear markety type things to happen, because everybody piles in on the short side. And then when the bull market continues on, they have to get liquidated. They get stopped out. They get ran, and that creates more upside fuel. If everybody's on board with the market going to 150, 200, 500, whatever, 1,000, whatever, higher from here, then there's nobody else to buy, right? So you need this constant tension of people who believe that that's the top, and they're placing bets for it to go short or go lower. And you need people who are constantly betting for it to go up. So this head and shoulders pattern that people are pointing to, if it fails, that could be some nice bullish fuel with liquidations coming and price going higher. I can get into all the liquidation levels and all that sort of stuff. We're not going to cover that in this video, but that's where we're looking at right now. Now, what gives me, there's two things that give me the confidence. First off, the crypto momentum system that we run at MacroOps issued a buy signal in October of 2023, and it is still long. And in fact, it typically lasts for approximately 2+ years on those buy signals. It's done it numerous times in the past, and this time so far doesn't look any different. So let me go in and show you. This is an analog chart of Bitcoin compared to the two previous bull markets post-halving of Bitcoin. So the 2016 to 2018 bull market is the yellow line, and the 2019 to 2021 bull market is the blue line. Okay. And then these vertical lines here, these vertical lines are the halvings. Okay. This is when Bitcoin halved, and simply it's about every 4 years, Bitcoin cuts in half the amount of rewards that they give for solving the Bitcoin equation or problem. It's the reward. So every time, the bull market happens as on a run up into the halving happens, and you get approximately about 6 months of sideways action. And then the market, then the crypto market starts to, and specifically here, Bitcoin starts its move. So far, it's done pretty much the same thing as the 2016 to 2018 bull market. And I would say that that's the most likely analog that I'm interested in following at the moment. The 2019, 2021 there was some things happening during that period that I would say are, you had a whole lot of government intervention in the economy, in society, and then a very draconian administration coming after everything crypto. And so I believe that was a more of a manipulated type of market than the 2016 to 2018. 2016 to 2018 bull market halving cycle of Bitcoin was indicative of retail investors getting access to Bitcoin. In that 2016 to 2018 period, Coinbase, Gemini, Kraken, Poloniex, Binance, Bitfinex, I'm trying to think of all the different crypto brokers, crypto exchanges, centralized exchanges came online. And with a web browser or a mobile phone app, all you had to do was just create your account, show them your ID, show them who you were, uh, put some money in there, and you could buy crypto. Okay. And that analog is very similar to what happened in 2024 with the ETFs, right? With the Bitcoin and Ethereum ETFs. Now, a much bigger pool of capital, stock investors could own Bitcoin. And so now you could have big hedge funds, wealth managers. I mean, BlackRock, the largest wealth management company in the world, is the biggest Bitcoin ETF. Um, and so the analog, 10 times larger um, at the time of its launch, so it was like 30, 40, $50,000 a Bitcoin, is kind of similar to when Bitcoin was trading in the hundreds, when Coinbase and those different things came online. So in the 2016, 2018 bull market, then you had other cryptos that people could, Ethereum came online, and it just became an actual market that your average investor, my father-in-law, for example, opened his Coinbase account in 2017. And I use him as a like a barometer to what the average person would be doing. I've been in crypto since like 2013 is when I like traded my first Bitcoin, but I've been into blockchain and that cryptography sort of work before it was used as money in the early 2000s. And so I don't have a good pulse of what your average person would be looking at in the crypto, like understand crypto. But when my father-in-law hit me up in 2017 to do it, that was a good way of saying, like, okay, this is what your average guy is doing. So it's my basic opinion that this analog, the white and the yellow, are basically the same. We had, I'm not going to say it's like day to day, minute by minute, the same. They're going to be off here and there, but generally, directionally, they're going to be the same. So we should be starting the next up leg in the Bitcoin trend higher, the Bitcoin bull market, should be starting pretty soon. And this leg, even though we've gone from around 30,000 to 100,000 on Bitcoin in a year, is still not the real juice. The real juice comes towards the end as we get to the top. And that's because market volatility at a market top, that's what creates a market top, is the fragileness of a market. When price can't hold a level and it just goes so high so fast that it skips so many price levels and then has to come down really quickly to fill that. If we go back to our chart here, we ran up here, but what haven't we done? We haven't dropped down really quickly to fill this out. We have been at this like 90,000 level since mid-November. So we're coming up on 2 full months above 90,000, from 90 to 110,000. Okay. That is, if you divide it by 10, that 9,000 to 10,000, that's kind of sideways, 900 to 1,000, right? 90 to 100. It's not really a lot, even though we're talking about like 10, 12, $20,000. It's really not a lot of range, and it's done it for 2 months without giving up too much of it. So unlike a major market top is you go from, like what happened, it goes 100% higher in, I believe it was 2 weeks back in, it goes from 10,000 on at the end of November on Thanksgiving to 20,000 within a couple of weeks. So it doubled 100%. in 2-3 weeks. That's where you get at major market tops. So, the same comparison is we would go from $100,000 to $200,000 in 2 to 3 weeks. That would be the equivalent of that sort of fragile price action. Not saying that happens. I'm just saying that when that happens, there's going to be so many more prices that get, like, it goes up, and that it instantly, because so many people are selling, taking profits, getting out, that it sells down into it so quickly. But I'm also not too worried about that being the case yet. When it is the case, I'll, not be too worried about it either, because that is the wealth effect of Bitcoin. And from there, you get Bitcoin dropping to kind of like consolidating and going sideways. And the wealth effect of everybody just made a whole bunch of money in Bitcoin, and they start looking for the juice in, like, what we've seen this last year in meme coins, in altcoins, and in everything not Bitcoin. But it will signal like that's kind of the end. Now, it could just, honestly, it could just bang around here for the next 6 months, kind of not do anything, and everybody get bored and have another, maybe do another, like, rip, sideways, rip, sideways, rip, sideways. It could do that on a continual basis and just kind of continue to increase in that way. But I believe it's more going to be tied to the macroeconomic cycle, liquidity, and the Goldilocks era that I talked about yesterday in yesterday's video, where 6 months from now, we should have declining CPI, rising ISM, no sign of inflation, no sign of a recession, despite everybody saying that it's just around the corner. And that would give us that environment of prices kind of being let loose. Now, politically, that's when the new administration will be in, and probably have enacted a bunch of things and started, got time to implement certain policies that might be, beneficial to risk markets, macroeconomics, and things like that. Who knows? But I'm expecting, as I said, following the analog, probably going to get going here soon, to the upside. Now, that doesn't mean that we can't, have this correction like we did in 2017, before it takes off. I'm fully expecting that, as you know, and that's why I have these orders in here. But if it does take off, if we do just kind of cool off here and alts start getting exciting, I'll be heading into the different alts to trade. We're already in a little bit. 1/8 of our exposure right now is in alts. I'm, for the most part, either all cash or Bitcoin at this point, otherwise. And so as we head into that, that's my main plan. So if you have any questions on this analysis, post them down below. If you have any thoughts, if, like, you think that something different's going to happen, let me know what you think. Ask questions, poke holes in my theories here. I'm here to learn, make money, share what I got, and make it all better for all of us. We win together. Come to macro-ops.com, sign up for our free emails. And yeah, let me know, what do you think we end 2025 at on Bitcoin?